You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music may be surprising to you, especially if you're listening live in the Secret Club, because you're saying to yourself, wait a minute, it's not Education Wednesday, it's Tuesday. What the heck is going on? Well, listeners, we're rejiggering things a little bit here this week. We got a double pro week coming at you, a lot of content flying fast and furious for all of our pro members, including a great pro Q&A session we just finished with none other than Uncle Mike himself. Coming up tomorrow, we've got Mr. Tony Saliba back in the hot seat for a second pro Q&A session coming at you this week, as well as, of course, Options Oddities on Friday. And for all of you Secret Club fans, you get to listen live right now to this, to everything else we're going to do throughout the week. You don't have to wait another week to hear episode 2 of Boot Camp this week. You're getting it in your hot little hands, or in this case, your ear holes, right now, back to back here. Where do you guys go to learn more, to join this Secret Club upon which so many of you have been joining up and having fun? Great to see so many new names and new people joining in there and participating and getting a lot of value out of it. It's the place to go, theoptionsinsider.com/pro. You can also go, if you're cool, to /secret club. Don't tell anybody. It's a secret. And that gets you a lot of fun stuff. And of course, if you listen on demand, all that we ask is that if you like what you hear, you keep rating and reviewing. It really does help a lot of the new people discover the content, just like this week's 5-star review. Actually, it's a little different, actually. It's along those same lines, though, which is why they floated it up to me, which is kind of cool. This comes from MCF. He writes, "Hey, dudes, congrats." Well, thank you. Congrats on such a long-running show. You're clearly doing something right because you're in the top 1.5% of podcasters on the planet. Keep it up. And he sent us, looks like a screenshot of what's called Global Rank from listennotes.com. And apparently they reviewed 2,836,444 podcasts around the globe. And they determined that Options Bootcamp is in the top 1.5% most popular shows on the planet. Well, thank you for that, MCF. We appreciate you doing that legwork for it. You know, I don't think of the shows that way. I mean, obviously I see the numbers. I know people like them. I know people like Bootcamp. I know how popular it is, but I don't think of it on a global ranking basis ever. So it's always kind of fun to see it there. So thanks for doing that legwork for us there, MCF. And you know, it's not just me here on the Options Bootcamp program. The other half of that 1.5%, maybe let's say more like an eighth. He is the black-hatted one himself, Mr. Dan Passarelli from MarketTakerMentoring.com, what the cool kids call MTM. Mr. P, welcome back to Options Bootcamp. Are you excited for this double pro-palooza, A? And then B, what do you think about being in the top 1.5% of something on the planet, sir? It's pretty cool.
Yeah, man, that is pretty cool. I am excited, first of all, yes. And boy, that's pretty great. Wonder if we beat out the Italian language podcast that I listen to.
Would you say you're in the top 1.5% of bass players on the planet, you think?
Yeah, probably in my house.
Top 1.5% of bass players in your immediate household. That's not very impressive at all. Considering your kids are out to college now, so they don't even really count it. Just you and your wife. And clearly she's smoking you at the bass playing right now. All right, Mr. Dan, as you will recall, sir, we had a great listener request on a recent episode. So we thought we would take that and spin it up into a full episode. So without further ado, let's get to a little bit of the old options drills.
Colin Boots. Time for our favorite pastime, option drills. We're going to take the strategies learned during the show and teach you how they can be employed to achieve a specific objective. Do you hear me? Yes, sir!
I guess it really isn't an options drill. I really just kind of wanted to hear that drop. Haven't heard it in a while. It's a fun one. Makes it very festive. Feels like 4th of July. This one kind of falls between the cracks of our segment. We don't have a segment really designed for this, but this was inspired by this request that came in, I believe, last episode from Max. See, folks, we like you guys. You guys write in with an interesting request. We'll try to honor it here on the program. He said, can we get an episode about stories from the trading floor? It would be great for all of us newcomers who can't do that anymore. And yes, you are correct. That is a difficult path to walk these days, as opposed to when Dan and I first got into the mix. I will say the caveat on this is that these are going to be mostly PG, family-friendly stories from the trading floor. If you know anything about the trading world, it's not exactly safe for work 99.9% of the time. So we will do our darndest to make this a wholesome, family-friendly approach to Tales from the Trading Floor. Mr. Dan, you think you can work within those rigid parameters, sir?
You know, I went into the trunk where I keep a bunch of old stuff in my room, and I dusted off one story that was rated PG. So yeah, I look forward to telling that one.
We get one story from Dan. All right, better be a good one. He's in the top 1.5% of PG trading floor storytellers. So I'm looking forward to that one. All right, let's kick it off how we got started, because that's a good way to get started with a Tales from the Trading Floor. So I myself, I mentioned it before, I was studying chemical engineering at school. It wasn't really exciting me, the notion of spending my life making soap in a chemical plant somewhere in Iowa. It didn't really thrill me. And then along came this whole bearings fiasco. I think it was around 95. And that kind of got a lot of people's attention. I was in the process of saying, maybe I want to try out this finance thing, maybe something I can actually apply as opposed to this kind of chemical theory I was learning all the time. And so this bearing things happened, and I said, these derivatives thing, no one seems to know about them. And so I started looking at the coursework that was offered in finance where I was studying, and there wasn't anything. There was no derivatives, nothing. And I was fortunate because I had, transferred into finance. I was doing pretty well at it. So I was starting to actually be a teaching assistant for some of the classes I was teaching. So that allowed me to look at the graduate school and take some classes there. And they actually had one course. It was just called derivatives. And so I went up, I took that. So let me see what these things are. And I took that course. And within a few weeks, I was like, oh, these things are pretty freaking cool. I could create a stock. I could create a bond. I don't need to trade those things directly. I can actually create them with these others, these synthetics. How cool is that? So that really kind of lured me to the dark side. So I was one of the few weirdo kids when I graduated college. I knew exactly what I wanted. I didn't want to be, all the other finance kids wanted to be iBankers or, maybe analysts. Very few of them wanted to be traders to begin with, let alone specific derivatives. That's the wheelhouse I wanted to go to. So I went and looked at all the stuff in New York, as you do, and all the different desks and the rotations you had to have at Goldman and Morgan, all these other things. And none of it was really that exciting. I actually went down to NYMEX. I went down to NYMEX because there wasn't a lot of options and derivatives there in the 90s in New York. But there was the NYMEX floors. I went down to the heating oil pits. That's kind of it for the big, decent-sized pits down there. And I looked at that. Even then, it seemed like, man, this stuff is kind of dead. Not a lot of interest in this at all. So I wasn't excited by the NYMEX floor. Then I got a call from a trading firm out in Chicago. They flew out and met me in New York. I met with them there, and then they flew me out to Chicago. And as fortune would have it, it was a very quiet day on the floor. So they actually threw a jacket on me, and I went down into the SPX pit for my interview. That was it to me. Even though it was a quiet day, wasn't a lot going on, I said to them, man, I could do this. I could do this now. I could come trade here as opposed to doing X number of years of rotations on different asset classes and different desks and some program. And then maybe eventually over time, I could get access to actually committing some capital. I could come in and do this, and within a year or so, I could be actually doing this. And they said, yeah. And I said, okay, I'm in. That's what lured me. So that's kind of what attracted me. So I guess you can kind of blame the SPX pit in and of itself, Dan, for luring me to this. So I'm curious for you, Dan, what was your PG origin story? What is it that lured you to the trading floor, sir?
Well, I mean, I grew up in a regular old suburb, nothing special, was not wealthy by any stretch of the imagination, my family, but, not like poor or anything either, just like, it's pretty regular. And I had to put myself through college. So I worked all through college. So I went to UIC, which is in Chicago, and it's about maybe a mile from the exchange. And every now and then I would go to the exchange. This is like 1990, 89 through 93. And I would walk up to the visitors gallery because it was open then. Like if you ever saw the movie Ferris Bueller's Day Off, like that was one of the things he did on his day off. And I just thought it was really neat. And so I kind of spent a lot of time just kind of watching and wondering. And I was like, I still didn't really at that point realize that I could be a trader on that floor. I thought it was just something that other people do. But when I graduated college, I decided that I just wanted to see what it's all about. I figure, hey, man, if I waste 6 months of my life not making any money, it's not the end of the world. It'll be an interesting experience. And then got familiar with what that world was and found that, no, there's backers. Like you don't have to have any money. You just have to figure it out. And somebody will give you money to trade. And I was like, wow, this is neat. So worked down there as a clerk for a long time, for like 4 years. First job out of college was making $9,000 a year, and didn't do too much better than that until I started trading 4 years later. But wouldn't look back. That was the best decision I could have made. I look at it as paying for my education to be around these option traders who really know what they're doing, and that's how I learned.
That's the first thing people don't know. The early days of this path, not exactly lucrative. You were making $9,000. I was doing a little bit better. I was coming out of the Ivy League. I was only making $28,000. I was definitely the lowest paid of all my classmates out there. But they do that. They know that you're going to catch up pretty quick. And that's kind of what that path is. Once you get on the badge and actually start trading, that's when you actually have a chance to make some real money. And speaking of that path, let's get to that now. So I mentioned I come out here. I say I want to do this. Unlike Dan, who kind of just wanders onto the trading floor, I actually proactively fly all the way to Chicago just to do this. But I get out here now. So you're trading. And one of the things you're doing usually in that time is you're clerking. You're learning how to do all this stuff. You're clerking for other traders on badges, and you're learning how to do things. In this case, there were a couple of big pits. This was before everything multiply listed. Now, listeners, well, what floors are left? For a while there, every exchange pretty much listed just about every major equity option. And then there are proprietary products that are only listed on their home exchange. Like the SIBO has SPX and VIX. Back then, SIBO was pretty much the biggest game in town by far. They had SPX, they had the OEX, which is kind of forgotten about now. It's the S&P 100, and there was IBM. That was the biggest equity going, kind of on the planet from an options perspective, and that was the biggest pit for it. There were a lot of guys out there, at least 50, if not more, in that IBM pit. So that was a big pit. So I went out there to do a lot of managing of the positions for those traders because they're busy doing trades. So you start off doing a lot of delta hedging. One of the big skills you learn, how to delta hedge your position, what that means, what that does from an impact perspective, why you do that. And I guess this is mostly a family-friendly story. We'll dial it down a bit. But there was another clerk and I we were working at the same time, and we lived near each other. And we had a fun idea to go out the night before. I think this was getting into close to expiration, sometime along those lines. And there was a bar near us that had yards of beer. And so we thought it was a good idea to consume a few of those before we went in the next day. And so we went in the next day, and let's just say we weren't on our A game. And the hedging was not exactly perfect. And so we came back off the floor afterwards, and the traders were looking at their positions like, yeah, we have all these residual deltas. What's going on? We got to hedge all this away. So I went off to the terminal in the after hours, and I just fired up. This is IBM, and I fired up to buy I forgot how many, thousands, tens of thousands of shares of IBM to hedge this. And all of a sudden I see everyone in the office start freaking out. Like, what's going on? Why is the Dow moving? Why is IBM shooting up like crazy? And so it turns out, Mr. Dan, in my, shall we say, somewhat impaired state, I accidentally moved the Dow and IBM quite a bit in the after hours by going. They went and said, what did you do? I learned quickly that the impact orders could have, especially in the after hours, sir. So that was a good lesson. Did you have any lessons along those lines of some of the errors or lessons you learned by perhaps screwing up inadvertently, or perhaps to blame your fellow clerk who forced you to have beverages?
Oh my goodness, yes. Where to even begin this one? Well, I recall this one time. This was back in the day where, like, right now everything's traded on computers. Back then, we would have these cards that the traders would literally write the trade on, like, with a pen. And then they would have their clerk come and grab the cards on a periodic basis every 20 minutes or whatever, type them into the computer, and have it spit out a piece of paper that had their delta and such on there. And so, yeah, I just remember there was this one time. I got to give you two stories here. There's this one time where, like, I don't know, I typed something in wrong, and it was a very busy day. And I worked for two traders. The one guy that I worked for, he was a yeller. All right. And it was like,
a trader was a yeller. I find that hard to believe, sir.
I know. Did you ever see, like, I just think of like a Warner Brothers or Woody Woodpecker cartoon where, like, like the character's in front of the lion and the lion roars and, like, the wind, like, blows his hair back, like that is exactly what it was like. And so I got to learn pretty quick not to goof up. And so let me segue that into this other story. So, call it 6 months later or something, another super busy day. And this time the computer just goes down. And I've just got stacks and stacks of cards. And so, like, my boss has no idea what his delta is, what his theta is, what his gamma is. It's this was in the bond options. They were moving like crazy. And he's like, what do you, I'll save you from having to bleep it out later. What the bleep are you? Bleep, 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 bleep. So what me and the other clerk figured out to do was to take the last printout that we gave him and figure out the deltas and gammas and thetas and vegas of every single one of the trades that he made. And, like, with a freaking, 99-cent calculator, add it all up and give it to him, which was stressful because you had to do it pretty fast because, like, every 10 seconds he was like, come on, where's my delta? What is my delta? Come on, you beep, beep, beep. And so it was a pretty cool learning experience. That was one of the things that one of the very, very challenging experiences that I credit with having really learned something during. And despite the fact it wasn't super fun at the time, it was eye-opening. I learned a lot.
Yeah, so don't just devour the offer with all your stock in the after hours, and also pay attention. Just the litany of abuse I witnessed on clerks in all those years down there. None of that would pass muster today, Mr. Dan. That would all be considered a hostile workplace at the very least. I saw just so many petty tyrants and egos and just abusive tirades that they cannot be listed here. But let's move on to some other interesting stories. I've told this one before on other shows. I'm not sure if I have here, because we don't talk SPX here very often, but I ended up breaking into the SPX bit, which, by the way, just as an aside, that was a fun moment, walking into what was at the time kind of the biggest, most intimidating pit on the CBOS, certainly. It wasn't a Eurodollars from size, but it was pretty darn big. And everyone was established, and people were trying to crowd into this thing and coming in as, a 21, 22-year-old kid and saying, hey, can I have some of that money too? Go figure, Dan. They weren't exactly welcoming to that notion. Here, sure, kid. You can have some of that money too. Why not? We'll share with you. And this is the time, of course, when physical presence meant a lot on the floor. You had to be able to trade and think, obviously, but also maintaining that spot, a physical spot, was a very valuable thing. So firms are going out and finding D1 linemen and massive dudes and trying to stick them in there just to hold spots so nobody would try to take them from them. Whether they could trade or not was a secondary thing. They needed them to hold the spot. So I ended up having to break in to try to carve out my spot with, there was a literal hockey goon they sent in to try to take the spot with me. So he and I were both pretty big guys squeezing into a spot that would generously be good for one person the whole day. So you're doing this, pushing against each other while you're trying to make markets so a broker can hear you. So, because you first break in, the brokers don't care about you. You're nobody. They're not going to give you any orders. They're not going to listen to your market. So you really have to shout and make a name for yourself and get their attention and get to know them. It was a whole process, listeners. So imagine that. I have to think in terms of civilian life. Now, obviously, if you go and do something in the military or like a first responder, those are all crazy things and you experience a lot of crazy stuff. In terms of a civilian occupation, I don't think there's a lot more in terms of high stress and pressure and that kind of stuff than trying to break into these trading pits, especially back in their height in the go-go 90s. The SPX now a bit of a different beast than it was back then. But I break into the SPX, establish a spot in the back, which would be now like the lower third. That pit has expanded quite a bit. Trading out there for a while, and then one day comes along, and it's kind of a quiet day. The S&P not really doing much that day. And then all of a sudden, every broker's phone in the pit lights up. It's a rare occurrence. You don't usually see that. Usually one broker gets an order, maybe a couple. Not everybody all at once. So that was my first sign of this. I thought, I'd only been doing it for a few months. Maybe, what the hell did I know? And so every broker's phone lights up. All of a sudden, they all start barking out markets. They want markets. And they're all for puts, out of the money puts. So what are these? I forgot what the S&P was at the time, but they wanted, these out of the money puts, and then these out of the money puts. How's the market on these? How's the market on these? How's the market on everyone? To a man was asking for out of the money puts. That's my second sign that this is weird. And then before you can even do anything, they're all like, okay, buy it. Usually a broker will try to work the order a little bit. They'll say, okay, if you're at, let's say you're at, I don't know, 1.5 at 2.5 on the thing. Say, okay, maybe we're 2.25 bid, and you kind of hang out there for a while and you work it. You come down a little bit. You move the markets around a little bit. In this case, there was none of that. It was just, what's your offer? Okay, buy them. And so everyone is stampeding each other, literally knocking people over and trampling each other to get to whatever broker was near you that wanted to buy those puts. And so all the guys around me are just trampling each other to sell these things. And here I am, kind of new. And I'm just like, man, it seemed wrong. It was one of these gift horses, right? I was like, this just seems wrong. What is going on? And so that moment of hesitation, I watched these guys sell the puts. They turn around. They have clerks on the row behind them, listeners, elevated above them on headsets, and they were connected to the pits in the Chicago Mercantile Exchange to hedge the futures. Remember, this is delta neutral trading. So if you're buying calls, for example, you're long deltas, you want to sell futures against them. In this case, they were selling puts, so they were also getting long deltas, so they had to sell futures against them. So they would turn around and they would use hand signals. They're called arbing. They would say, hey, sell 5, sell 10, sell 20, sell whatever, 50, however many futures they had to sell. And in that brief time, until they looked at the broker, the broker said, I'll buy him. He said, sold, however many you want to sell, 100, 200. And when they turned around to get to the attention of their clerk and say, hey, sell 20 or whatever futures, in that brief period, the S&P just fell out of bed. And by the time they got their orders in, and then you could see their faces watching the S&P ticking off, it fell at least 20 handles, maybe more, which back then was a lot more than it even sounds like today. And then it kept selling off after that. And it turned out the Treasury Secretary, Richard Rubin, I believe it was at the time, had mysteriously stepped down. And obviously there was a little bit of information linkage on that. And everybody decided to call the SPX pit and pick off all the market makers. And so one by one, all the guys around me just got obliterated. And it was a pretty dire lesson pretty quickly in that you got to be careful what you do out there, because 1 or 2 missteps and that could be it for you. You could be done. So that was certainly an intimidating and scary moment. And I think I dodged it by almost pure luck in a lot of ways. Mr. Dan, what are your thoughts on any tales like that of near misses or catastrophes?
Oh my God. Yeah. Well, I mean, I was just thinking about taking, where to even begin with this one? I was first thinking about taking spots, and I remember like when I was still a clerk, an arm clerk, like I got hired from being a runner and got like, a $3,000 a year raise. So I think I was up to $12,000 a year, and got hired by one of the biggest brokers in the bond option pit. And so, like I was pretty much still fresh out of college. I'd been on the floor for a couple of months. I was still trying to get comfortable with arbing, that hand signal thing. If you guys were listening to Mark's story on that. And so that's the job that I got, though, to be an arb clerk. And so like in my mind, I'm thinking like, Oh, yeah. Okay. So, I mean, I've worked jobs before, fast food and, selling clothes at the mall. So there'll be this training period, and I'll figure it out during the training period. And so in the morning, I'm standing like in front of the yard clerk who's like an old pro. And he's like, okay, yeah, you watching me? You watching me? I'm like, yeah, I'm watching. And then like 2 hours goes by and he goes, all right, come on up here. I'm like, oh, cool. I get to stand closer and watch everything. He goes, I'm going to lunch. I'll see you in an hour. I'm like, okay, who's filling in for you? He's like, you are, you idiot. So I'm like, oh my God. And so that was a pretty scary day for me. But and then, also with.
And I'm sure the traders you worked for were very kind and very understanding of your lack of expertise. And they welcomed you with open arms, sir, and were very boosting of your confidence at all times.
Well, this guy actually, this first guy that I worked for, he actually wasn't that bad. But like a big order came in and he just looked at me with this look of panic and like grabbed me by the lapel. And he goes, are you sure? And I'm like, yes. And I was right. So I got lucky. But yeah, that having spots, boy, I can never forget that. When I was trading on the board of trade, we just used to call it proximity trading. If you can't touch the broker, you're just not on the trade. And oh man, that was such a boys club down there at the time. Like you could be first, you could be loudest, the broker just doesn't hear you. All the guys who like have been standing around him for 10 years.
Yeah, all the guys who took him to Vegas the week before, they're getting on the order. You're not. Yeah,
exactly. But yeah, and it's tough breaking into pits. Man, on the CBOE trading floor, it probably took me a good year to tell you the truth. Of just people not talking to you. Like people try and make it as comfortable for you as possible when you're trying to break into a new pit. Why?
Yes, they're very welcoming. Like, hey, kid, come in and share in our vast riches. Why don't you? Because in a lot of ways, listeners, you're coming to literally take money out of their pockets. And so it's, as you can imagine, they're not exactly welcoming to that. On that notion of space and proximity, which is, again, it's kind of a lost concept now. It seems insane to have to be able to do all this analytics in your head and while you're also physically fighting for proximity. But I mentioned I broke into the SPX. After I had done all this and established my spots and everything, all this work I had done. Then around the 2000 timeframe, 99, 2000, a multiple listing happened. What happened, man, was all of used to be SIBO was the big dog. It had, had IBM, had SPX, had OEX. Some other exchanges had some other little things, like the P Coast had some of the tech names out there, like Sun and Dell were listed out there. Amex was actually in New York over there, so there were some Intel was over there on the Amex, and which was weird. There were a bunch of other exchanges had individual equity options, and then the SEC came down and said, no more of that. That's collusion. You guys all have to compete for everything. So overnight, the game changed, and all of a sudden, SIBO started listing everything, and all the other exchanges started listing what SIBO had. So it became just a mad gold rush to go out of everyone was leaving the SPX and going out into these other pits. I remember Dell coming online and people getting in literal fights to get into Dell, America Online, Microsoft, all these big names came. Sun, a lot of these aren't big names anymore, but they were back then. And they were literal fights every day to get into these spots because these were new crowds opening up. And at the time, these names were trading many hundreds of dollars. So there's a lot of paper, a lot of volatility, a lot of chance to make money in these things. So then they announced Intel's coming. I said, you know what? Okay, I'm going to try it out. I'm going to be one of these guys who's going to break into these things. So I leave my coveted spot in the SPX. I had one of my other guys take over for it. So I had trained him up. So we didn't lose that spot, thankfully. I said, I'm going to go break into this. So what happened at the end of that day was we all went down to the turnstile, and we knew there's new pits coming online the next day. So people went and pretty much got in line for the next day's opening right then at the turnstile. So I went and got my spot in line. I was the first. And I got a bench because I was first. And so I ended up sleeping over on a bench in the lobby of the SIBO, which sounds insane, but that's what we had to do. And there were a bunch of other people lined up there too. And I kind of cheated. I left for a period, had one of my clerks kind of hold my spot for me a little bit. So I didn't spend the whole night there, but it was pretty unpleasant. And then, of course, you have to be ready to go that next morning. The second the turnstiles are ready, you can go first, race up the escalators, go out to where the new pit is starting. And so, of course, I was the first guy out in Intel. So I got the first spot right next to the floor broker who was in the pit with the DPM at the time. And that was kind of the beginning of my odyssey in equities and Intel. So that was a different experience. And of course, that was all kinds of fun trying to hold on to that spot too. It might have been actually Intel. I forget now. There were two big guys I had to contend with. I forget which one was the hockey goon. Might have been an Intel there, but they didn't make my life easy. They all were sending out all of their various goons to try to take my spots during all this time. So imagine that, listeners. You're trying to do your options trading and everything else while on top of that having to contend with literal goons in this case, which is always fun. Mr. Dan, you have any stories along those lines of trying to break into a new crowd or anything like that?
Oh my God, yeah. I mean, during that first year of standing in the Ford Motor Company pit, if I had a nickel for every time either I said to somebody in my pit or somebody in my pit said to me, "I'll meet you at the horse."
The freaking horse! I didn't even mention that. Why don't you tell them what that was all about?
Yeah, so like right outside the CBOE building, or at least the old CBOE building, they just moved this past year. There is a statue, like, on a pedestal in a like a fountain of a very anatomically correct horse. And so, it was like kind of this big, broad, like place where people would go and sit down, and they would, have smoke breaks or have lunch. And so when somebody was going to get in a fight, like that is where people went. And there literally were fist fights at the horse on a somewhat regular basis. I mean, I won't say like once a week, but I'd be surprised if it wasn't once every 6 weeks or so. There was like a literal fist fight.
It's insane that they would choose that spot because it's right in front of the freaking exchange. It's the most obvious spot where you're going to get caught, and the floor broker is going to come. They're going to fine you. But they would always say that. You're right. To the horse, or I'll meet you at the horse. That was the spot. I don't know why. Why not a back alley behind the exchange? But that's where grievances were settled, listeners. The horse in front of the SIBO. I can see it here in the studio that when we first launched the Options Insider, Sun Times did a write-up on us, and they asked me where I wanted to get my picture. I said, I'm going to get a picture in front of the horse. So I still have that picture right now in the Sun Times of myself standing in front of the horse when we launched the Options Inside, just because it has so many historic memories, listeners. But yes, that was a place where adult grown men would go to fight because this was serious business. So yes, the horse. I totally forgot about the horse. See, Dan, that's why I got you on the program with me to bring in these nuggets of joy and nostalgia. Speaking of Intel, people want, crazy stories as well. I remember I was out there for a while. Things were going well. Intel, this is kind of analogous to what we saw this past year with the meme stock palooza. All the .com stocks were just exploding. And Intel was very much at the forefront of that wave. Intel and Microsoft were kind of like the vanguard of the .com bubble, if you will. And so everyone knew they had earnings coming up. It was going to be a big thing. I remember I get back and I asked my clerk, hey, where's Intel trading in the after hours? And he said something like, oh, it was down some absurd amount. And he said, oh, they pre-announced bad earnings. And that was kind of the first sign, the canary in the coal mine, that maybe the bloom was coming off the .com rose. And it was freaking Intel, like one of the motherships of the .com bubble. So I remember just freaking out, like, what do you mean? And sure enough, it was just down a ton. And I was fortunate, Dan. I had some long gamma because I wasn't one of these, crazy short gamma guys. So I actually had some bullets to go. So when the stock dropped, I was able to get some hedges off, and it actually worked out. And I come in the next morning, kind of wondering, the stock's down more. And I was like, man, this is going to be nuts. And sure enough, when I get to my pit that day, I'm already a little nervous about this. I get to my pit. There's the usual guys who are out there. And then the rest of the floor, it was kind of a slow day. There wasn't much else going on. So almost every other trader from every other, not all of them, obviously, because there are thousands, but quite a few, a very representative sampling, had gathered around the pit in a huge crowd just to watch. That's how nuts the people knew it was going to be. And in between them and our actual crowd was the brokers and all the walk-ins. These are brokers who walk over the floor, listeners. They have an order for one pit, they go out there. They have an order for another pit, they go out there. They call them walk-ins. And they were all lined up 5 deep around our pit as well. So the paper was already there. So they just knew it was going to be just a completely insane day. And sure enough, it was one of the busiest days I ever had trading in terms of contracts and everything else. It was a pretty good day, too. I can't lie. When the sell-off was going, and as it kept going down, obviously all anybody wanted to do was buy puts. So as a market maker, you wanted to have those bullets. You wanted to have that long gamma. You don't want to be short all the tails, so you could sell them at increasing higher and higher vol levels throughout the morning until the sell-off kind of reached its apex. And then when it hit there and the stock kind of rebounded a little bit, that's when the vol came crashing in. and you could buy all those puts back you sold in the morning for, a pittance of the vol level. So that was a good education from that perspective as well. Just kind of how the vol works in these crazy explosive moments and how you have to really be judicious where you kind of buy that vol, because if you buy it at the apex there, you could end up getting wiped out. And as a market maker, you had to sell a lot of it, obviously. So being able to stagger your levels, not being short a ton of wings so you can do that kind of stuff, having the bullets, as they say. That was an important education. Dan, you have any moments like that where you could think of where a name got annihilated or had a big move when you were out there trading, sir?
Yeah, a good number of them. Well, there was this one time, I think you told this story about coming in after a couple of soda pops.
I don't know what you're talking about. I deny everything.
But I remember that, this one day I came into the pit, and this is when we still had like handheld we had handheld computers now. Like it was like basically the size of your laptop, and you'd strap it to your back, and every day you'd go home with a sore back. But I came in and, hey, I was moving a little slow, had maybe a little bit of a hangover. And, but I always made it to the floor on time, no matter what. Big man at night, big man in the morning. Right. So I get in and I'm like trying to get my bearings. Ding, ding, ding. The market opens and I'm looking at my computer and I'm like, what the hell is wrong with Kerr McGee? This is one of the stocks I traded, Kerr McGee, KMG. And I'm like, my deltas are all messed up. It's saying, and I've got like 5,000 deltas, and it's saying I made $60,000. What the heck is going on? There's something totally wrong here. And somebody in the pit was like, hey, did you see Kerr McGee? The news came out and they're up like, $11 or something. I'm like, wait a minute. So hold on a second here. Because I was usually a long gamma sort of fellow myself. And so I just totally happened to be on the right side of everything that day. And it worked out really nice. Not for any doing of my own, mind you, but that ended up being a pretty good day.
That's the nice thing about long gamma. It is a little bit more forgiving. Those kind of things happen. You're like, oh, that's nice. That's a nice little windfall in your back pocket. That's why we say a lot of times on the show, listeners, don't be caught short in units. We've learned these things the hard way. If you got a lot of short gamma, particularly at inopportune levels, that could come back to bite you if you're not prepared for it. So why do we do this episode? Obviously, the person asked for it, so we like to accommodate you. It's kind of fun. We have never really done this before. I got a feeling maybe we'll do more of these down the line. We can get into all the delicious beverages they had at Ceres, sir, and how people would spend their whole days there sometimes instead of trading, which is I always scratch my head at that. But some folks like to spend their trading days outside the trading floor at other places. But yeah, the notion of market making, at the end of the day, this is a career path that is mostly gone now. You can't really do it anymore. You can to a degree, but it's a very different beast. You're not going into a physical pit. You're going to be upstairs, and it's a very different creature now than it was back then. But also just to kind of show that, still, I think to this day, in terms of learning how to trade options, how options work, risk management, it's hard to beat market making from that path. The analogy I often use is that it's kind of like immersion training for a language. You want to learn Spanish, you just drop yourself in the middle of Spain and you sink or swim, right? You're going to learn it, you're going to speak, you're going to get by, or you're not. Market making was very similar. You had positions like we just talked about. All these positions, we didn't put them on. They were given to us or forced upon us many times. And so we had to figure out how to get out of them for a profit, how to manage the risk that was coming at us, like for a day like Intel's crash, right? All you can do is sell puts. No one was selling me puts. So how do you manage risk in those types of extreme scenarios? Those types of things you can learn from that are just invaluable lessons for later on in life. So obviously, if you can't do that anymore, you can't learn options trading that way anymore, the next best thing you could do is, of course, to go out and learn from someone who has done that. And I still recommend that to anyone whenever possible, which is why I do a show with a guy like that, Mr. P. So Mr. P, if folks want to reach out to you and do a little bit of learning themselves, where should they go? What should they do?
Well, we'd love to talk to you. Make your way on over to markettaker.com, 2 T's in a row, and glad to help out however we can. Seriously.
All right, listeners, asking you shall receive. You guys wanted the tales from the trading floor? This is the PG version. If you want more of this, we could probably do more of it. There's other things we could talk about. Obviously, not going to get into the NSFW stuff. That's not for this show. Got to keep our clean rating in iTunes out there. But there are interesting and informative lessons to be taken away from that career path and those moments. So check those out. And of course, if you want to check out more, if you're not done yet, you want a little bit more in your ear holes, don't worry. Live listeners, pro members, we got you covered. We'll be back instantaneously with episode 2 of our double options boot camp extravaganza. Everybody else, you have to wait a week. And of course, we'll see you back here. Then I'll be traveling next week. So we'll see you back here live again in 2 weeks. Another episode of Options Boot Camp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.